If you thought inflation was bad now, just wait until I show you this. You came here for the truth, so let me unveil that for you. In today's video, first we're going to explore the falsehoods, what the media will tell you, and then we're going to take the time to look at reality. Why is that the case? Because if you're here, obviously you want to know the truth. That information is generally withheld because they want to paint a rosy picture. They got to worry about their advertisers. But here on this channel, I simply want to bring you reality. I know I want to sleep good at night, and I'm sure you're in the same circumstance. So first, we're going to look at what's going on with inflation. The expectation that the Federal Reserve is going to cut interest rates and the effect that will have. But even as it stands today, just the expectation of the Fed cutting at some point, which, by the way, we were told would happen in June, in July, in September, and then it was December, and now it's March. Who knows when that's going to happen? But just putting that carrot right in front, dangling, oh, it's coming, has been enough to pull the market forward. Okay? And so when I told you back last year that the market would find its bottom at this particular time and it would move up from this point, it didn't take much to see that because of the patterns that I've been following. If you've been here on this channel, you know exactly what I'm talking about. And now we're seeing something which is quite a reversal from that trend. The deflationary aspects, yeah, there are some. But what about the inflation? And what's going to happen to your gas? What's going to happen to your energy, your housing prices, and your stocks? Let's show you right now. Here's what it would take for the Fed to start slashing interest rates in 2024. You could see what they're trying to do is that in terms of the Fed fund futures, it's showing us a 5/4 percentage point rate cut in the next year. The market keeps trying to front run these rate cuts only to be disappointed. But the market itself is doing well. But when we break it down further, it isn't the whole market that's doing well. There's a few stocks that are doing exceptionally well. So we'll look at that a little bit further as well. But what I'm showing you here is that the pricing in, when we're talking about Fed funds futures, they're looking for rate cuts to be quite significant, actually. Fed's favorite gauge shows inflation rose 0.2% in October and 3.5% from a year ago. Well, that was as expected. So here we go in terms of, where do we end up? It's when they look at the chart, I mean, you could see it for yourself. When you see these charts, it indicates that we are in this time frame of suggesting that inflation's coming down. Is that true? Well, not real inflation, but their metrics. So if inflation is coming down, obviously they have an excuse to cut rates. So as long as the general direction is down, if you look at that, obviously, you see where it was before. The trend is down. That's the way you got to take that. And yeah, we could look at real inflation as we will here. You got to understand that their inflation is also important because they make their decisions based on that stuff, even though it's nonsense. You and I know that, right? We have to look at the news objectively. Some people, you probably have an uncle, a brother, a coworker who watches the news and literally believes everything they say. That's not you, though. I know that's not you. But I mean, yes, we can laugh at this, but we have to realize that there's actually an important. There's a distinction. There's a value even in those fake statistics. That's why I show it to you. You can look at shadow stats, all that stuff. That's valuable because you want to know what the real number is. But you got to look at the fake stuff too. And I hope others out there in the YouTube world do show you both, because businesses, the central bank actions, governments, they're making decisions based on this data, even though it's not real. So it does affect you. Rice is on the cusp of a fresh 15-year high in Asia after sharp rebound. One thing after another, we are watching the prices rise. Rice has had a massive surge, obviously with India curbing exports and so on. We have OPEC Plus agreeing to deepen voluntary oil OPEC cuts. They're not the only ones. We've seen country-specific cuts that have come around. Previously being Saudi Arabia and Russia had cut as well. You could see there Saudi Arabia, Russia, and other members of OPEC Plus who pump more than 40% of the world's oil met to discuss supply policy. The market reaction implies disbelief in the full efficacy of the cuts. Now, you could take this two ways. Two ways. Well, why are they cutting? Some would say that Saudi Arabia wants to do this, perhaps Russia as well, because they're using it to make, number one, make it more expensive so that they can make more money. But at the same time, this is their tool in this war that's happening. And so they're trying to put this squeeze where they can, but keeping it political. You can tell me what you think. Is this a political action, or is it possible, or maybe economic, I should say? Is it political or economic? Or is this the understanding that 2024, there's going to be a major recession globally, and therefore will need less oil so that they can kind of smooth out their losses that they may take in the future? That's something to consider. All right. What about this? This particular Deutsche Bank analyst forecast in the Fed suggesting that rate cuts are going to be 175 basis points in 2024 in response to a mild recession. That would make the Fed funds rate between 3.5% and 3.75% from today, right? Because that 5.25 to 5.5. The expectation is that they're going to cut. They want that cut. And we don't know how bad a recession will be when they eventually admit it, if they do admit it. But everybody is calling for cuts. Now, when usually during that time frame, when everybody is saying one thing, it's usually the opposite. But the expectation is certainly there. What's going on already, though? Well, I've been talking about this for a long time. Look at the stock market. Broken down into, let's take that purple one right in the middle. If you're looking at the legend in the top left corner, that's the MSCI, all world excluding the US. Okay, so what's happening in the world outside of the US? Well, it hasn't moved in a year. The market hasn't moved in a year globally. So when you say stock market is up, actually it's not. It's not up at all. But look at the Magnificent 7 stock index. Okay, those are the tech stocks in the US. They've performed extremely well. Okay, particularly towards the beginning of the year, and that's extreme in many ways. Just seeing that trend has been off the charts. So the inflation is there in a sense. We're looking at that. But the whole market is not feeling the love because they're still concerned about recession, the demand from China, consumer demand has been down, so on and so forth. But money wants to go somewhere. They want yield, and so they're finding that in these top tech stocks in the United States. U.S. home prices climbed for 7th month in a row to a record high, according to Case-Shiller. And so this is just showing us that despite everything that's going on, sales of home prices have declined significantly. The mortgage rates are up. They're over 7% still. They've come down from 8% down to 7 and change. But still the prices are going higher and higher because there's just so much money. Inventory, of course, super low right now. And there's people just dying to buy. They're just waiting for interest rates to come down. If they do, can they find a home? If that happens, there's going to be multiple bidders again. The construction isn't happening because they don't want to get into the business when there's so much uncertainty. What's going to happen next year? We don't know. All right. If you are dealing with financial circumstances yourself, I have linked up with this company right here, Money Pickle, to help you out with that. They have CFPs, they have fiduciaries, they do it for free. and they will do the 45-minute call with you for free. You can get your circumstance looked at. Just ask them any question you want. In that 45-minute, I spoke to one of the co-founders. Seemed like a great guy. He knew my stuff. I appreciated that, obviously. All you do is click on the link in my the description. It will bring you over to my website. You can look at the little thing I have there, or just click the link, which brings you to this, and you could schedule a call immediately. Just do it. It's free. Why not? Why not take advantage? And let me know. Everybody that I've heard from so far has said good things, positive things. So I want to know what you think on that as well. And the comment of the day: I will be surprised if they can hold it together until March, talking about the rate cuts. It's wild. I mean, but you're seeing clearly, it looks like it's been crazy glued together. If anything, it's duct taped together. Will it hold? I'll leave that up to you. You tell me. If you appreciate this video, hit that thumbs up button, because when you do that, you're not only supporting me, but you're telling everybody out there, this is a good thing. Watch this video. I hope you'll do that before you leave each and every time. Don't forget, though, tomorrow I've got some really good stuff you need to check out. So I hope you'll join me then. The Money GPS, each and every single day, doing this for well over a decade. I'll see you then. Take care.